Hey guys, and welcome back to our channel. In today's video we will talk about the weekly candle close. We have seen an insane weekly bounce currently and this bigger falling wedge. That's what Liam will talk with you about in the chart analysis. Therefore we have also some really interesting on-chain data. For example, the liquidation level heat map. This could be another dump. Where are the main levels? And also some changes in the open interest and other very interesting on-chain data. Stay tuned, and I would say if you want to support us, please leave a like, subscribe to the channel and activate the bell. And I would say let's start into the video. Let's go.
Today in the on-chain data news, we'll first have a look at the open interest in the CVD spot, which is the cumulative volume delta for the spot market. So it indicates whether the spot market is selling or buying more, and the delta of that is what is shown here. And what we can see from that is that we still got a pretty big open interest in the futures market with 10.9 billion US dollars. And I think if this correction here, which we saw in the last few days, will further continue, we'll definitely see a notable drop of the open interest. I think something close to 8 billion would be realistic if we have a look at the last bigger wick we got to the downside, which was here at 25k. We saw a massive drop in the open interest from 10 billion to close to 7 billion. So that was a wipeout of nearly 2 billion US dollars in future open interest. And I think that is what we still expect in this position we are at the moment. Yeah, we saw a little bounce, which is absolutely normal in a bigger correction, but the open interest is still high. The funding fees are still positive, which is also not typical in my opinion. Normally you see at least a few days of negative funding fees after you got a big drop to the downside. So I think it could be possible that we still see a further correction to the downside, because also we have to look at the liquidation heat map where we can see where bigger liquidity pools could be, and we can clearly see here that we got a big liquidity pool around 35k, a little bit lower, like 34k maybe, and we got also a liquidity pool in the low $20,000 range, somewhere at maybe like 23,000 or something. I probably don't think that we see a correction that far down, because we're at the beginning of a bull market. We have strong fundamentals. We got the ETF approval, which I think will have a bigger impact in the next months. So in my opinion, I think we will still see a further correction to the downside after we got that little bounce in the correction, but maybe not that low. So I think the liquidity pool at 34k, I think that would be realistic that we grab this liquidity right there, but the low 20s would be a little bit too far in my opinion. I could imagine that we'll see a large wick if we have a massive liquidation event and maybe wipe out 1 or 2 billion in this open interest we just talked about. Then I could imagine that we get a really fast wick to the downside, maybe in the low 20s. I'm prepared for all of that. I got buy orders nearly every $1,000 or sometimes even every $500 positioned in the market. So if there will be a large liquidity grab to the downside, I'm prepared and my buy orders will get filled. So I'm just dollar cost averaging here, which is the easiest and often a really good strategy. But I also think the fundamentals are still very, very strong. If we have a look at the long-term holder and short-term holder cost basis, we can clearly see that the short-term holders are still buying at these relatively high prices we are seeing at the moment. The price levels of 40,000 hasn't been here for a long time in the crypto market. So it's clearly a very good sign that we are still seeing the short-term holder cost basis is rising, because it indicates that the people are still buying Bitcoin despite we are seeing a correction at the moment. I could still imagine, as I just mentioned before, that we could see this correction continue for maybe 1 or 2 weeks, but on the long run, for the next 1 or 2 years, I think this fundamental here, the short-term holder and long-term holder cost basis, as it is rising, is a really, really good sign that we'll just see the next bull run in the next 1 or 2 years, as it has always been in the crypto market for the last 10 years. But I think that's enough on-chain data for today, and I will give over to Liam, who will have a look at the charts with you.
Guys, we have seen a massive reversal in the weekly candle, and what this means to the Bitcoin price, this we want to see now in the chart analysis. So basically, guys, we can see that we dumped to like around 38,500 US dollar and got very, very much reversaled to the upside, and now we have a green weekly candle here. And if we close a weekly candle like this, we have a very bullish sign for the Bitcoin price, as you can see here, and we maybe see another high, because we had this double top here at around 43,800 US dollar, and if we cross this double top to the upside and have a higher weekly close, so basically from this mid rally the highest weekly close, then we can expect that we see maybe levels above 50,000 US dollar for the Bitcoin price. And this will be not only a wick, because if we see a weekly close this bullish, we maybe see another pump and the correction for the Bitcoin price is over. So guys, let's go forward to the day chart and see what we have with our falling wedge we saw yesterday in the video or in the chart analysis. Now let's go over to the day chart, and here we can see, and I want to turn on the day moving averages because we are in our breakout, in our long breakout out of our falling wedge here. And we saw also yesterday in the video that we have this top here at around 44,200 US dollar, and maybe we will reach this price level. But guys, please be aware of this 50-day moving average, because we crossed the 50-day moving average for the first time since mid of September here. And of course, it is very important for the Bitcoin price to cross this to the upside, because if we don't cross the 50-day moving average to the upside and get rejected, then we can expect that the correction goes forward and we see maybe price levels like 35,000 US dollar or lower, and of course maybe see a retest of the 200-day moving average. But when we pump above the 50-day moving average, we maybe reach the price target of 44,200 US dollar and maybe pump above the horizontal resistance line and maybe see higher price levels, higher highs at the Bitcoin price, like around 50,000 US dollar. And guys, of course, we have to keep an eye on the RSI, because we have the bearish divergence here. And if we are rejected here at this line with the RSI, we can expect that we go forward with our correction at the Bitcoin price and don't reach higher highs in this mid rally, because it is also important that we have to keep an eye on the halving, because the halving is at the end of April. And since we have the halving at the end of April, we maybe have the correction until then and just start with the bull market after the halving in the end of April. So guys, keep an eye on this here. If we have a daily close above the 50-day moving average, it looks quite bullish for the Bitcoin price. And if we get rejected here, we maybe go forward with our correction. And guys, this was the video. I hope you enjoyed it. When you enjoyed it, please leave a like or a follow there, and we see us in the next video tomorrow. Thank you and goodbye.